Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert. The Dividend Diplomat. We are going to talk about a dud in our portfolio today. There is one stock that is pissing me off so much, Lanny. Is it time to finally cut bait, take the loss, and move these funds into something that is much better?
Subscribe, guys. Hit that like button because Bert's about to stomp a mud hole in this jabroni's candy ass here, guys. We're talking about a dog stock here, getting crushed this year by 56%, down 63% in the last 5 years. Very unfortunate. There was some big news that actually hit the headlines recently. But Bert, what's this darn stock we're talking about?
We're talking about Intel, ticker symbol INTC. I'm in some year-end cleanup I talked about last week
Love it.
about
Love
how
it.
I cut some stocks, bought some Google. I've made some other moves yet that we'll talk about here in a later video here on our channel. So stay tuned, everybody. Intel, though, man, it is having a rough week. At one point in the last 52 weeks, Laney, it was as high as $50 per share. Intel has not caught a break. They were riding the wave of building the manufacturing, getting all these grants, investing in Ohio, investing in Arizona. Then the delays happened, and then the lack of a vision happened, and everything started to snowball. And it kind of reached the crescendo this week here, Lanny, when the CEO suddenly resigned. And what turned out is the news came out over the week. Stock initially popped. It jumped up to $25 per share, and now it is down to $20.80 because what's coming is the board forced the Intel CEO out the door. And throughout the week, it's become clear that they never actually really had a plan of what's going to happen after the CEO is gone.
Well, apply for that position there, Bert.
Yeah, I'm ready, Intel. I want to take my money and make it better. So what's been going down here? They don't have a plan. They've put in two interim CEOs, and they're talking about the process of what they're going to be doing, how they're going to be interviewing a new CEO. The news is from one of the interim CEOs that they want to have somebody that is heavily invested in the foundry business, heavily invested in building that hardware of what the previous CEO that was trying to build this turnaround story, trying to build in the United States, break the supply chain issues that have plagued so many companies, was invested in. That's what they want to do. They want to have somebody that has experience and can turn that ship around.
Yeah, I mean, the foundry business is very important. You know, from the CHIPS Act, if you want to get these $7 to $8 billion of infusion from the U.S. government from the CHIPS Act, you got to have that foundry business. You got to keep at least 50.1% ownership of that foundry business, Intel. So if you had plans to spin off that foundry business to another public entity or private entity, you better make sure you've got majority ownership there. And it makes a hell of a lot of sense then to have a new incoming CEO that has that foundry experience if it's going to be that big, of an importance to your financial position, at least in the near term.
And that's right. And that's what's making this so difficult because the analysts in Wall Street are
I
actually.
don't have any foundry experience.
I do not either. But I am an accountant. Keep that in mind. All right. So, all right. The thing is, though, Wall Street doesn't like that. Wall Street's saying Intel will actually be a better company in the long run if it gets rid of said foundry business. That the foundry business is what's bringing all those margins down, Lanny. They're saying that the gross margins would increase to 50%. Earnings per share would be $3 to $4 per share. Intel would pop up to $50 to $60 per share of a stock if they exit the foundry business, which obviously sounds appealing when Intel is at $20.80 and has forward earnings of 98 cents. So analysts want one thing. The interim CEOs want them to invest in the other because they have that billion-dollar funding grants tied to it. Man, what a mess for this new CEO that they're going to inherit.
Yeah, it's a tug of war, right? I mean, again, stocks getting their asses kicked. It's still almost 100 billion market cap stock, which is insane still for Intel. But just think about where it's come down from, which was once a beloved, iconic, no doubt about it type of stock. So Intel, now Bert, this is really coming down to, you mentioned cleanup in the beginning of the video. You've been cleaning up a lot of stocks. I can't wait for the next video from what else you've been cleaning up. You're thinking about in your portfolio, possibly your wife's portfolio, for how much do you own right now of Intel stock in your taxable stock account?
That's a great question. This is actually a funny story here with Intel. Both my wife and I had pretty substantial positions. I had about 130 something shares. My wife has a little over like 130, 140. But last year, Landy and we were writing some covered call options. We're going through this. I remember this one vividly. Intel was in the high 20s. I had a strike price as a 35 at 35.50 per share at the end of the week. Intel finished at 35.70 in my option was called. So the 100 of the 130 shares I owned, Lanny, gone. So I'm left in my portfolio with 33 shares for $753 at a loss of 33%, so $371. So my position is small. I didn't do that with my wife, so she has a much larger position. She owns about 2,000 shares, $2,000. Well, not 2,000 shares, $2,000 of Intel, and she's down 53% and $2,226. So, in the spirit of my portfolio cleanup, what I was talking about and what we talked about in one of our last videos is cutting positions that are small, cutting positions you don't believe in. It's the same reason I cut Walgreens from my wife's portfolio was because it was only about $400. And why wait for the turnaround from Walgreens that may never come for just $400? Even if it doubles, it's only getting you to $800. That's kind of where I am right now for my position of $750 with Intel is what am I waiting for with that small of a position? Where is the return and the reward later on?
Yeah, and from just the stress of it all, again, another thing that you have to monitor. So right now, are you leaning more towards possibly exiting your Intel stock position?
Yeah, that's where I'm leading with it. I mean, Intel cut their dividend. They're not paying so it's not as if this is some like I have like
They pause that dividend, right?
yeah, it's not as if I have 5% yield that I'm trading off right here. I'm paying 0% yield. And where I'm really leaning is, at least for my $750, I've been talking about building up Google. It's been the one that I've been eyeing. Which tech stock, lady? If I asked you this question before this video without any background, if I said 15 years from now, which tech stock is going to have a better future, Google or Intel, who would you tell me?
I would take Tesla. No, I'm kidding.
Yeah.
Google. I mean, Google
Yeah.
Chrome. I've got an Android-powered phone.
Yeah.
We're filming this out here for YouTube.
Yeah, exactly. So of the two, I would pick them. So why not put the $753 of mine in there? And quite frankly, maybe even just do that for my wife. Like we'll see how this goes. But there's a lot of news that still has to come from the CEO search.
No, I respect it. I love it. We're going to quickly run through the Intel Dividend Diplomat stock screener metrics on this darn stock.
Well, it
Again,
should be
trading
fast.
at what's that?
That it should be fast.
Should be fast. Trading at $20.80. EPS 98 cents. P ratio of 21 times their puny earnings if they actually have earnings when it actually comes out.
Zero dividend, so payout ratio is NA. No dividend growth, they pause that dividend. NA. Dividend yield 0%. It's below whatever their 5-year average yield is, and they're down 56% over the last year. Their PE ratio 21 to Landy is actually higher than Google right now. Think about that. Intel is trading at a higher multiple than Google, who's at
exit stage left. Exit stage left. So here you are, Bert. You've got about, you've got still a decent chunk of shares yourself. Yeah. If you got 753 shares, you could probably get what? Close to 4 shares of Google.
Yeah, and it's what I would want to do is build a larger position, and that's a solid foundation to start with. Obviously,
yeah, I know you mentioned getting to 10 shares, something like that, right?
I want to at least get myself and my wife to between $10 to $20 shares each of Google. So
$20 at Google stock.
Maybe bring it in. So everyone, let me know what you think about this. If you were me, what would you do with Intel? Would you cut bait on the smaller position? Would you cut bait on all of the positions now? Or are you waiting to see who the new CEO is? Are you waiting to see if there's a pop that might be coming in the next month when Intel announces the CEO and then you make your move? I'd love to hear your thoughts in that comment section below.
Guys, like this video. Let us know what other assets or investments you've been buying, what other stocks to buy are out there, guys. Let's keep building passive income. Keep doing the right thing in your personal financial life, guys. Like the video, hit subscribe. And guys, you're either with us or you're against us, Jack. That was Bert the Hurt and Lanny from the Dividend Diplomats, over and out.